Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So it was a pretty good week for mortgage rates. I think back on Tuesday and ultimately Wednesday, probably had the best rate sheet in 3 months. And just in the last 48 hours, watching things kind of drift away from us as we start to head towards what's going to be a nice long holiday weekend, which we hope you all enjoy. And if you notice, there's this window where a trade doesn't happen between this is going from Wednesday to Thursday. There's a saying in the markets, and we'll have to see where we close this day, but you want to trade in the direction of the window. In this case, it's going lower. So that means, we could see lower prices. Maybe we come down and visit these bottoms. It wouldn't be a surprise in our eyes at all. And it means over the next couple of days, we could be subject to some more price erosion. So that's something to think about in managing a short-term pipeline, especially after seeing what has been a wonderful increase in prices over the last 2 weeks. It's a shame to see this kind of drift away. So that's something we're thinking about. The other thing we're thinking about is the amount of complacency in the bond market. The bond market has gotten pretty darn comfortable with the 10-year note, but 155 to 161 now, and it just seems that that high level of complacency is usually a precursor to more volatility and potentially a spike higher in rates. And so, the market will be driven by the news of the day, and the biggest things that we're watching right now are the inflation, whether it's going to be higher on a month-to-month basis. We know in a year-over-year it will be much higher, but where is it going on a month-to-month basis? If it's higher than even expected, that will bring that renewed taper talk. And that's the thing that, honestly, if you had one, piece that you should be getting clients in the boat for is the Fed. I don't see the Fed tapering anytime soon. But if inflation's hotter than expected, and we're not expecting that either, but we don't know what the numbers are going to be like if they were to come in hotter month over month, and just that taper talk comes. That's when things got ugly last time back in 2013, when the taper talk actually started to happen. The minute it was uttered, rates went up pretty darn high, from, let's call it 160 on a 10-year note to over 3% in just a few months. And the Fed didn't even have to taper. I mean, they didn't do anything. They were still buying bonds and rates went higher. So, and that's a testament to the fact that the Fed can't control long-term rates. They can influence, they can manipulate. But ultimately, if rates want to go higher, the selling could be overwhelming, and the Fed may not be able to do enough to stop the rise. So if there was ever a time to get people, in the boat and taking advantage of what's here, rates are looking pretty darn good. Rates can go another level lower. We're not saying that they can't. In fact, there are some of the economic data, frankly, of late hasn't been that great. And I think the economy maybe is getting maybe too robust or too optimistic as to what this reopening trade is going to look like. Some of the numbers that have come out lately haven't been that great on the economic front, and particularly are in my eyes, deflationary and certainly not supportive of some runaway inflation, not at all. But so going into the weekend, let's watch this window. Let's see if this forms, because that will be resistance on the way up. That'll put a limit on how good prices can get. And you can see pretty clear here, there's a lot of resistance right at this 101 level. And one more piece looks like it's going to be built in if we get this window going in the next week. So hope this finds you well. Have yourself a terrific weekend. Be safe. Talk to you soon. Bye for now.